So ladies and gentlemen, we're moving on now to the next session, which is the panel session. Now, this panel discussion is the first, and it's focused on the fintech frontiers, talking about mapping possible futures arising from innovations to the fintech industry. And we've got panelists who are standing by and are ready to take us into this session. They're ready to just dive in and have a lovely session. And I'll just call them up now. Let me give you a bit of 30 seconds to finish up with uploading so that there wouldn't be any excuse not to give the panelists a round of applause, because I know you're typing and you're doing the selfie. So 30 seconds, to upload, and then we'll give the panelists a big round of applause. So I'm starting with the co-founder and CEO at Bankly, the bank to the unbanked, which focuses on digitizing cash and enabling the informal sector grow income safely and simply. I'm talking about none other than Majekodunmi. Let's give her a round of applause, please. Thank you, Tomi. Thank you. Now, while she makes her way here, let me quickly introduce the next panelist. The next panelist is the co-founder and director of business development at Paga, a mobile payment platform. I'm talking about Alabraba. Please let's give him a round of applause. So we must not be guilty of, clapping for one panelist above another. I see we've raised the tempo, so let's not lower it. Let it keep going higher and higher. Just as you clap for Jay, let's clap for the other panelists, right? Great. We're warming up. Now, the next panelist is Nyangeri. He is the co-founder, chief commercial officer at Ndovu, a Kenyan startup that's focused on helping Africans invest in the financial market. He's also, Ndovu rather, is also one of Oui Capital's portfolio companies. Let's give him a round of applause, please. Whoa. And we've got the moderator for this panel. The moderator for this panel is one of our own. He's a principal partner at Oui Capital, where he leads investment focusing on fintech and digital commerce. I'm talking about none other than Peter Oriaifo. Let's make welcome Peter. So Peter is going to be moderating the session. I will now hand over to Peter.
All right. Thank you, Tommy. So, I wanted to kind of start off our conversation today, focus on fintech. And the industry's seen a lot of interest in recent years. I think in particular, during the first half of this year, we saw venture capital funding come in at around 330 million, which was more than double the amount of the year prior. And we see that owing to a number of different catalysts, some of which at this juncture we're familiar with, rapidly expanding youth population, improvements in internet connectivity, and also to just some of the increasing innovations that we've seen spurred in part by COVID-19. And with our panelists today, we seek to explore, A, the state of the ecosystem, B, to get a sense for kind of how we can continue to keep this growing with all this new interest and with the influx of global capital coming into the space. So turning it over to our panelists, I want to start off by just having each of you kind of talk a bit about some of the changes you've seen in the industry with respect to COVID-19. So more specifically, how has COVID-19 changed the pace of your business over the past 12 months?
Doesn't work. Okay, thank you, Peter. My name is Tomi, run Bankly. Bankly started out as a digital savings platform. So sometime in 2018, we looked at the ecosystem and realized that there was a lot of people kept serving the same pie. So you're talking about several layers innovation, but still serving the bank. And we know that there's a larger pie. There's more people that should come into the financial ecosystem, and with more people, with more digitization, more services. So, give you an example. If people didn't get banked, if my money wasn't sitting in my bank account, there is no way I can save on Piggyverse, because I can't save money I'm keeping in my bag in Piggyverse. So it first has to be in a bank account for me to save in Piggyverse. Now, if there was a pay stack, there would be no way I can transfer the money from or do. So there were several layers, but it was serving the same. So we're like, okay, how can we make more people within the bank? So Piggyverse, we have more people. Paystack, we have more people. How can we expand that pie? So with research, we realized that what are the pain points, or what are the blockades that are preventing people from digitizing cash? And the first thing we found was, there were several layers, right? But we found that the segment wanted a bit of a hybrid model. They wanted offline, online. You could come with, to say, tech, but you needed to kind of put a personal touch to it. The second thing we realized was so if you're going to give them tech for something that we're doing manually, you needed to bring a personal touch. So in 2018, we launched 2019 specifically, and very quickly we took some learnings that if you are going to be collecting cash, the agent needed to have e-money. Because if you're going to sell phones, you need to buy phones. So technically, they were kind of trading money. So it was then that agent kept saying that we were never going to go into agency banking in per se. We're going to just receive deposit. Wow. So we're testing it out while getting the regulatory requirements. And quick learnings, sometime late November, we realized that if you're going to help get to digitize cash, you needed to give them some tools. So the POS conversation came up. And that wasn't where, so you quickly learn from the market. And that also happened with COVID. So while we were trying to figure out how do we give them terminals, do we go direct, do we work with partners, we engaged some partners, they were like, no. And they were like, okay, fine. Before losing the agents we had, let's see how we can actually deploy some terminals to test. And we tested March 2020. We started to test, and COVID hits. And so you can imagine starting just testing. And it was quite interesting, because if we didn't take the response November 2019 and didn't respond, even though we took the plan, we started working towards it, and we were fast to market, which is speed is important, and then tested in 2020, Bankly wouldn't exist. Because at the time, what we were building was for people to digitize cash from their daily fund in market. Now, lockdown happened. People were losing their source of income. In fact, what we were driving was trust. So people needed to access their savings faster. Now, what then drove was community banking. So what we observed during COVID was that because branches were closed, ATMs didn't have enough funds, so community agency banking was huge. And that was how we were able to kind of scale and understand, while still, I will still call it that building the bridge towards where we're going to. I like saying that Bankly was going to another side of the city, and then there was a river and you wanted to build it. You needed a bridge. Either you're asking someone, let me pay you a lease to climb your bridge, and I said no, and then you go build your bridge. But I would say specifically, three things. COVID actually meant that people, the segment we were serving, needed access to the emergency fund, and that's the culture we're trying to build. It's an emergency fund. And the second thing being that community banking, agency banking was very critical during those times. Thank you.
Thank you, Tomi. So similar to Bankly, we had great experience. I'll say the experience around COVID time, the impact of agents to their communities, right? You know, during the COVID period, there were certain services or certain organizations that were deemed to be essential services, and CBN explicitly did not include agents, for example. Paga, for those that do not know, it's a payment and digital financial services company. Part of our business model involves agents, so we have a nationwide network of agents, about 60,000 service points. And these agents serve as, let's say, cash in, cash out points for financial services, of course, right? To the wallet system as well. these agents were not deemed to be essential services, and so the early days of the lockdown, there were some concerns about, will these agents be available to serve customers, etc. I would say one key learning we had was that these agents, first of all, are extremely resilient, so they figured out how they continue to transact. In fact, during that period, during that lockdown period, within the first month or within the first 3 weeks, we saw that 80% of the agents remained very active, right? So they, first of all, have very deep relationships in their communities and are able to continue transacting. I would say other experiences, just layering on Tomi's comments during the COVID period, is realizing how, let's say, a tech-enabled company like ours can continue to operate with very, very little disruption when we had to work remote, right? I think at the turn of a dime, we all had to figure out how we work from home, get internet services to people. Team had to step up, of course. Everybody was freaked out about their lives and the lives of their families. But people figured out a way to make things continue to work. So I think that realization that despite the infrastructural issues we have in Nigeria, being able to actually create a system for the company to continue to run remotely, I think was a really big deal as well. Maybe the third point I'll layer on is that we saw at Paga a significant spike in the self-service aspect of digital payments. We only launched, or let me say started to actively promote the wallet. This is a case where people transact directly from their wallets in late 2019. We saw a significant spike, like within the first month, like a 200% increase in signups, et cetera, and that momentum has been maintained. So I think this aversion to handling cash or be in present doing transactions sort of like stimulated the uptake of those digital financial services, which was really good as a positive, despite the issues with that COVID brought for us. Let me leave it at that. Here you go.
Yeah, for Ro, maybe the question is a little different since Ndovu may have not been around right at the onset of COVID. Yeah. So I think if we would kind of add a bit of nuance. So, living and working in Kenya, which is primarily a mobile money-led market, what were some of the changes you saw COVID-19 bring about with respect to fintech, and how did it inform your approach to building Ndovu?
Okay, fantastic. Thanks, Peter. Morning, everyone. Just to give you some color around Ndovu. Ndovu is an investment company, essentially, that enables East Africans to easily access financial markets. Think of us as this interesting baby where it's piggy vest meets cowrie wise meets bamboo. We provide all that on a single platform. Peter, spot on. We launched right smack at the start of COVID and lockdowns in Kenya in June 2020. But what really helped us, I think at the tail end of the same month, the Kenyan government came out with a public health regulation, right? Like every single person should go digital, forget cash, right? In-person meetings were banned. This second bit actually helped us because think of the traditional investor. He wants to come to brick and mortar. Do you chaps exist? Who's behind the company? I want to shake hands. I want to fill paperwork in triplicate. With the directive from the government, folks no longer wanted to travel. They wanted to deploy cash, meet their investor or the advisor remotely. Mobile money, of course, Kenya is a definite leader. In the first version of our product, we had designed it to be more of a bank transfer sort of product because there were limitations around mobile money. In July, the Kenyan government lifted the limits. They actually took them up for mobile money. So the stuff that we thought, we are looking at investors, we are going to put in, say, $750, all right? That was the initial limit in Kenya. It was moved to $3,000 per transaction, right? So suddenly all the folks that we thought, hey, these guys are going to do bank transfers, all of them moved to mobile money. And this essentially opened up Ndovu to a wider populace because it went into the aspect of fulfill my need now, right? So I've chosen a product I want to invest in and I'm paying now. Great uptick for our business, and yeah, it's going well. I mean, we're seeing numbers, 30% growth month on month, 95% of the transactions funded by mobile money. Thank you.
Thank you. So kind of building on top of that, and kind of pointing to my earlier preface where I kind of talked about the explosion in fintech funding. You know, as you would see from a lot of the TechCrunch announcements, it seems like money is all over the place chasing fintech founders. And as a result, we've seen an explosion in valuations and round sizes of the like. I guess a question I have to the panelists, maybe perhaps starting with yourself, Jay, as a OG in the space, having been here long before the hype. What's your take on this profound interest in fintech in Africa today, and especially coming from global investors?
So what's my take? I guess first of all, I should note that it is well deserved, right? The opportunity is huge in Africa right now. There's a tremendous need for, great, first of all, financial infrastructure, and then services directly to consumers as well. So there is something behind it. There's meat behind the activity. For many other reasons, there's of course a lot of money in the system as well, right? So I won't speak directly about valuations, etc. But one thing is certain, that over time, as you call me an OG, don't be deceived by the gray hair here. I'm only like 25 or 26. I'm not sure, but yeah, exactly. But a lot has changed over time, right? I mean, we launched Paga to the public in 2012. And at that time, there was no BVN, if you guys remember. Actually, I don't remember if the term fintech even existed at that time, right? But there's been growth, there's been steady growth since then, and what we've built, I'll say, is a very strong infrastructure. The point I'm making with this, not to pitch Paga directly, is that it is a lot easier for businesses in fintech to be set up today and run, right? Because there are rails to ride on. It's something that we do as well. We actually provide rails to third parties to leverage on to build their businesses. Many businesses that you know in Nigeria today are riding on Paga infrastructure as well. But yeah, it's with that kind of lightweight entry or lower barriers to enter, people are able to invest money in many other things, including promoting their services or customer acquisition, etc. So my perspective is that it is well deserved. I think there will be points where consolidation will happen and perhaps more value will be created, or some players will leave the room. But right now, the opportunity is still huge. I don't think we're scratching the surface yet on the Africa-wide opportunity in fintech.
Tommy, care to comment?
I'll say Jay actually hit the nail on the head. The opportunity is huge, and people kind of think it's mature, it's actually no. We're going to see a lot more of it in the couple more years. Then we then start to see maturity. It's still in the growth phase. We then start to see maturity, collaborations, and whatnot. I also say that a lot of people say, oh, you see more stronger valuations. Absolutely, I'll say, even for me, if I see pre-seed valuations now, I'm like, wow, I wish I could have commanded this 3 years ago, 2 years ago when I was raising pre-seed. But the use of funds is getting more expensive. Technology gets more expensive. Talent, trust me, when the competitor raises 100 million and is able to literally poach the whole team, you have to go. It's a defense. Money is a defense, and for startup as well. So as you see that growth, it then naturally means there has to be the growth in the fundraising for the ecosystem, because you're competing for the same pool of resources, and you need to be able to compete. Yeah.
That question, the first thing that came to me, Peter, was this wonderful movie from 1999 called The Matrix. The first one, forget the others were rubbish. The first one. And there was a moment in there where Keanu Reeves is told, take a blue pill or red pill, and you'll see reality, all right? Global investors, I think, have taken the pill. Now they're seeing the reality that we have always known about Africa and its potential, right? That touches on the flow of funds into the continent. Definitely valuations are going up. As you mentioned, it's pricey to get the right people. We've seen this firsthand at Ndovu, like our tech team, part of it sits remotely. We have to pay a good penny for them. So increasing valuations driven by the fundraise, ultimately supported by global investors. So as Ndovu, personally as well, I'm quite bullish on this. I think it's gonna increase going forward in terms of cash coming into the continent. Are we gonna see consolidation? That's still up for, for discussion. But I think it's a marvelous macro trend for the continent. Thank you.
No, I do agree. In conversations that I frequently have with global investors, it feels very much like the valuations have been dictated historically by local VCs in the African marketplace, but with some of these global investors coming in, we're seeing some convergence with global standards as they almost essentially import their worldview as it relates to valuation. So, for example, say, an $8 million pre-seed is, a bit of an anomaly here in this ecosystem, but in the American ecosystem, that's still considered cheap by their standards. So I think the propensity to offer stronger valuations also kind of ties into this growing search for yield. And as I think about kind of the makeup of some of the companies that you're building, right? With Tomi, Jay, you guys building more for what I might describe as a mass market solution with an offline component, and whereas Ro building with Ndovu that is targeting more of kind of an online specific segment. How do you communicate your value proposition as you have conversations with investors, right? I know there's been a lot of talk about the continued digitization of Africa, but when we still have a reality in which only 25% of the continent has internet connectivity. How do you communicate the value proposition of, say, what you're building for an offline segment versus, for yourself, or what you're building for an online segment?
So I actually missed the early part of it. I was dealing with the water supply, but I think I caught most of it. I want to address a point around, I think you made a distinction to say that I think Bankley and Paga were sort of more focused on offline.
No, so I meant that had an offline component.
Okay, very good. So I think the offline-online discussion. So the way we view it at Paga is what we've built is a hybrid structure, right? There is need for both offline and online. Digital only in Africa today will not scale, we believe, right? So there is a need for that offline, especially that point around digitizing cash. We see the agent network, which exists today, and in Nigeria there's a drive for a shared agent network. So folks can, if let's say MTN goes out to spend a lot of money building agent networks, we will all ride on that network because by regulation they're required to leave it open for folks. It's still critical. We have an agent network as well, but we see it as a means to an end, right? Long term, as smartphone penetration increases, as identity gets solved properly, right? Right now, this whole NIN, BVN, even voters registration conversation is still flailing and in flux. As it comes together, I think we're going to see a lot more of that transition to self-service digital. And agents will have other value-added services that they provide, right? I'm one of those people that, and I conflict with my partner on this. He thinks that eventually there will be a completely cashless situation. I believe cash is here to stay to a certain extent, and so for that reason there will be a need to digitize, a need to have at least a way to get cash into the digital system.
Yeah. So Peter, your question, just riding off what Jay said, is how do we speak to investors talking around this value proposition? The storytelling around your understanding of the industry, which is part of what Jay has kind of scratched the surface, because it's a whole lot of, there's so much nuances to that. But the main thing is, for us, we're able to draw a parallel with something that has already happened. Mobile inclusion. We're clearly shown the maturity, the phases, how mobile inclusion happened. Give you an instance. The telcos first came, and thinking about it was an agency banking that happened. Why? I won't say banking, or maybe agency telecommunication. You have a phone booth or the umbrella guy. You go to him, you make a call, he serves you. You didn't have a phone. The customer was not directly to the telco. You didn't have a phone. And then you pay him for the service, you walk away. You really didn't care whose SIM was in the phone he served you with. As long as you could call your mom, you're in school, you didn't care. But it didn't stay there. But that was the first phase of the industry. There was an explosion of agent networks. There was umbrellas everywhere, whether it's MTN, whether it's this. A lot of people could not even afford a mobile phone. Then they moved to the next phase of the industry. What happened in the next phase? The telcos started targeting people individually. So they started targeting the consumer. Now the consumer decides based on pricing, based on service, based on whatever, to choose whether you want to be with Econet, you wanted to be with Airtel, you wanted to be with Glow. But then you still go to the agent, but this time around not to use his phone. It wasn't providing you with service. You were buying a commodity. You were digitizing cash. So you go, you give him cash, you buy a voucher, you load it on your phone, you walk away. Now, it didn't, and that was where shared agent network truly happened, because by the time the power dynamics transformed in the hands of the consumer, the agent doesn't care, because the person who sells Coke, sells Pepsi, sells Mirinda, and you don't really, the woman doesn't care if Coke can offer a slimmer margin and Pepsi will offer a much more margin. But what would determine what she stocks is what the consumers are demanding. And when you get to the point where it's consumer driven, it then becomes truly shared agent, because the agent will just serve. Right now, people go to an OPay and say, fund my Zenith Bank, fund my GT Bank, fund my First Bank. And it doesn't matter when the 100,000 enters into the GT Bank account, it doesn't matter to Zenith or to GT where the money came in from. The transactions just happened. So that's the second phase of the industry. And the third phase is where people then, new channels are opening. There are still people who are using, so I agree with Jay that cash will never be eliminated, but there are phases to it. And so we got to a point where some people still buy vouchers. Some people still go top of VTU because they're handling cash. And so cash means that you couldn't take advantage of the channel a Hulu would do when his funding is, if he's buying airtime right now, none of us will know, he's just standing there. But if the cash sits in his pocket, he would have to step outside, tell a security man to buy me a recharge card or something. So until digitization happens, and that's why digitization is a thing. Now, once we've moved past the 40 million or thereabout that is, we still have 60 million to go. Now, it's possible that maybe the pass mark will be 70 or whatever the National Inclusion Strategy says. But imagine how many banks, how many telcos, how many payment services, how many card companies are serving 40 million. And imagine how much more will serve an extra 30 million that comes. And that's why we say the investment you're seeing will continue for a short while until the maturity happens, because there's still more people to serve. And that's what people like Paga and Bankley needs to serve. And that's the story we tell investors. And with a clear understanding of that, it makes sense. Yeah.
Thank you. Peter, for us, it's two things that we talk about with our investors. One you lightly touched on, but if you don't mind, I'll touch on it again. There's a macro trend. We are seeing, especially on the wealth tech side, we've seen what has happened with startups in Mexico, for example, onboarding over 20 million people into the Mexican market. We've seen the same in Brazil. We've seen what Grow has done in India. We've seen Ajaib in Indonesia. So there's a global trend towards digitization of the wealth management space. But if we look at Kenya's situation, it's quite unique in that our discussions in Kenya and the wider East Africa are no longer about banking the unbanked, because what M-Pesa and our telcos have done, I can say 97, 98% of our folks are banked because there's a bank account on their SIM card. The discussion is different. It's now about doing financial inclusion for the financial markets. Random statistic. In Kenya, population about 51 million of the last census. We only have about 110,000 people who are invested in the capital market, right? So there's a huge opportunity for financial inclusion on that particular aspect. Get folks already banked to start making an actual return on the money that is sitting, be it in a mobile wallet or sitting in a bank account somewhere. So really those are the two, the macro trend and the financial inclusion for the people.
No, appreciate that. And actually building off of what you said around kind of the savings case, I think one piece of explosive growth we've also seen within the ecosystem has been around cryptocurrency, right? I believe Paxful in 2020 actually pointed out that Nigeria was its second largest market, moving a little under $600 million in transaction volume. And as we continue to see the strengthening use cases for cryptocurrency, whether it's with respect to hedging against rampant inflation, speculative purposes for increasing wealth, or even just the use case around payments, fast cross-border payments and the like, how do each of you think about cryptocurrency as you are building your respective solutions? Does it lie somewhere in your roadmap, somewhere in the future?
I can take that. As Ndovu, we operate in Kenya, where Central Bank of Kenya is quite anti-crypto, all right? So is it something that we are looking at in the short term? No. Discussions are still ongoing with the regulator. We have to be on the good side with them 24/7. Does it lie on our roadmap? Definitely, because of our expansion plans in the region. There are other jurisdictions that are more malleable or more flexible towards crypto. Again, the use case is definitely there around looking at crypto as an asset class. That is something we're exploring internally as Ndovu, rather than payments, because of the very nature of our business. Can we make this an interesting alternative investment in a portfolio, be it for retail or even institutions that are quite keen on diversifying their holdings? Thanks.
Yeah, I would say exactly what my fellow panelists said. And no, there's no CBN person in the room, but it is clear in Nigeria as well, the central bank doesn't have a very pro-crypto view. At Paga, we're very, very bullish on crypto, but similarly, we are looking at it more for our other markets that we're rolling into, at least in the short term. But long term, I'm certain that Nigeria will come around and we will see more regulation and permissions around crypto here locally. But more broadly, we're also very bullish on blockchain overall, right? And the opportunities that creates to create additional value for the various stakeholders in our ecosystem. And I think there's a lot more investment going on locally now. Over the next, call it 12 to 18 months, I think we'll see a lot more of that happening. Even this e-Naira conversation that is clearly in Nigeria that CBN insists is not crypto. I think riding on potential blockchain opportunities, I think that may actually be the reason e-Naira makes sense, right? Is that it creates more use cases or supports more use cases that are valuable to the country.
I think I would like to come from a more overall angle, thinking about the future of blockchain, crypto, specifically within this the fintech in Nigeria. I think fintech, the future of fintech is in that direction. Whatever the regulators say now, they would have to get with those times in the future. And I think it would, the more I see it, the more I see how blockchain will be almost like the switch to which we do transactions. Talk about, let's use the interswitch for an example, as an example. One of the reasons why the Nigerian payment space is mature, even much more mature than sometimes the West, the US and co, is for such an infrastructure, that instant payment that came, well, that was as a result of several banks coming together even from the private sector to build a switch. Now, I think that whoever is thinking in that direction should actually be thinking as a switch, but powered by blockchain, because what that would mean is you can then layer deposits in the wallet. I did some courageous thing yesterday. I don't know if Jay is on the group. Where some regulators were, down all the way to the deputy governors of CBN. I was asking quite interesting questions on the e-Naira. And after I had to ask myself, Tommy, do you want to die? I said, oh, die, and I die. Like, like, oh, die, and I asked the question, and boom, then the swords came out, and I was no longer there. But we needed to ask the question, what is this thing? So this digital money. So what is the money in my wallet? Is it not digital? Like, is it cash? It's not. It's just a digital version of the fiat currency. So if e-Naira is not, it just seems to me like a fintech, telling other fintechs to sell its own product. Like, let me not go there. But I think blockchain is seriously going to be, so think about it. I say, someone has a Paga wallet in Nigeria, and another person has a Paga wallet in Ghana. Now, I have money in my account. So for movement of cash, Naira would transform into whatever, because the deposit itself is sitting in a way on the blockchain. So it's tokenized deposit. And so it will convert into whatever, it could even be a Paga coin, and then move to this, and then Paga coin has the same value, and of course can be translated to, am I speaking your strategy? I'm kidding. So it could even be a Paga coin, and when it gets to Ghana, it instantly turns to cities, and that was seamless. So the truth is that blockchain is at the front, is going to be the future of payment. We need the regulators to get there, and so for now, we're thinking about it. We love what it's going to be, but we're staying within and towing the lines of what our regulators have told us to do. But we believe that when they get there, we would follow on, and we would meet them there.
Yeah, got it. So to one interesting trend that we've seen taking shape, especially this year, has been around the digitization of SMEs. And it makes sense when you think about it, which I would say the first layer of fintech payment solutions was focused on building the payment infrastructure, and then the next piece to enable commerce, most of which is happening amongst the SMEs, as with them serving as merchants and the like. How do each of you think about the SME opportunity with over 44 million SMEs out there?
Yes, the opportunity around providing services for, and I'll even go micro, small, and medium-sized businesses, right, is huge. You already made that point, right? There's over 40 million of them identified in Nigeria, and frankly, they provide the majority of employment that exists in the country today, right? And these are both offline and online. I mean, right now we need to also point out that online SMEs or MSMEs exist as well. People selling on Instagram, people trying to make deals on GG, etc. Right? The opportunity is huge. For a fintech, a payments company, the opportunity to digitize payments is significant. COVID, as I mentioned earlier, sort of created an additional aversion to handling cash. So, the opportunity to use everything from bank transfers to cards to contactless payments, etc., becomes, a big deal. Even the person selling, recharge cards, right, in a small kiosk wants to be able to accept card payments. This is something that has driven the boom that we're seeing in, POS deployments across the country. Even though it has created its own issues, the acceptance of digital payments is big there. But beyond payments, I think there's a lot that can be done as well for MSMEs around digitization. Just keeping their records in a way that allows them access, credit through partners, allows them create some kind of a history that, it's a reputation they can use with other vendors when they're receiving goods. So within the Paga group, we have an organization called Doroki that was recently launched. It was actually launched last month, which was November. The initial launch, we declared, a partnership with Visa as well. And here what we're doing with Doroki is rolling out digital payments to SMEs, but also giving them a platform to manage their businesses better, right? So everything from the record keeping to payroll to access to credit, et cetera. And as it extends and as the network grows, also giving them access to new business opportunities as well. So the opportunity is huge. I know there are several parties that are targeting either the offline or the online. For us, we think the offline opportunity has to be dealt with first, and actually having made some headway there is help those folks go online also. So it's huge, and I think I would say it's the most important thing that we can do, i.e. supporting SMEs, MSMEs to grow the economy overall. Because financial inclusion is one thing, but economic inclusion, starting with the micro entrepreneur, I think is an even more important point.
Thanks, Peter. Speaking from Kenya's side, I think about 60% of our GDP is actually powered by MSMEs. And just to add on to what Jay has mentioned, in addition to the digitization of, say, the records, the internal processes, access to credit, I think there's a huge opportunity around solving the issue of delayed payments for MSMEs. So you provide a service, you're proud, but then the guy owes you money, decides to take you to Senegal, to Djibouti and back before paying you, I think there's a huge space there. If we can, I don't know, create, whether it's on tap, working capital financing based on the dues that are there, or whichever form that it comes out is, I think MSMEs will actually benefit from this. With our own analysis, we believe that delayed payments are the weapon of mass destruction to small business. Thanks.
So as we're starting to come up on time, I wanted to give each of you an opportunity to talk a bit about what you're most excited for in the future of fintech. Could be something you're actively thinking about or you're working on, whether it's thinking about interoperability, open banking, or some of the other SME opportunities like Doroki at Paga. And yeah, if you could just kind of speak to what you're most excited for in the year to come.
Have the mic. So I'll say my excitement is more around the kind of the investment that are going into the space, because you need the money to grow. Secondly is around the consolidations that will happen within the next 3 years at most. We're going to see, and those consolidations will help beyond just the market you're targeting, but the talent, the pool of talent that is coming together to think together, the quality of technology that would merge, and just the quality of founders that would then not walk alone. The second part is around the next frontier of people that will come into the financial inclusion space. I keep talking about expanding the pie, because once it's larger, there's more lending to be done for lending companies. There's more volumes for payment companies to serve. There's more deposits for banks. There's just more of everything, and there's more even potential economic inclusion for those. And I wanted to talk, even at that, I'm very happy with, I'm not focused on SMEs right now, but I'm very excited with products like Doroki that Jay was talking about. You tend to see a lot of MSMEs that think they're making money. The lack of education in the space is crazy. That think they're making money, people who, they have volumes, but they are not even, the way they're running the business, they're not tracking all of their costs, they're not able they're not even putting all of the founders on a salary, so they can't even tell whether they are breaking even or they are profitable. And so when technology comes to support the real sector, we will see growth in the economy potentially, and the education and all of what's not that will happen within. So I'm very excited, like I said, consolidation, funding, new products, and the retail segment coming into the digitized space. So those 4 things.
I think Tomi has spoken well. The one thing I will add that's a source of excitement as well is this whole free trade agreement across Africa, the lowering of the barriers and the clearing of the borders to the extent that it can be successful, I think creates a much larger opportunity for all of us, right? Already you see certain companies going across multiple countries in Africa. We at Paga just got regulatory approval in Ethiopia, so we're going to be launching there next. But the opportunity is huge, and I think it also creates, not to flog a dead horse, this point around consolidation. I think going to these new countries also creates additional opportunity for partnership, right? And that partnership, is just a spin on this whole thing about, collaboration and consolidation. So I'm excited about that as well, the opportunity across Africa.
Jay was hiding in my mind somewhere. I was actually thinking about the free trade area as well. Definitely integration. I am bullish on the integration that will happen. We're looking at a scenario where you have a fintech in Mauritania that can collaborate with one in Mozambique, Can you raise cash in Namibia and deploy it to an entity in Egypt, For me, it's a possibilities of integration that fintech actually provides on the continent. Thank you.
All right, thank you. And I think we want all our panelists to stay on stage for a moment for a picture, and then we'll transition to the networking session.
All right, so we'll take pictures very quickly, and then afterwards we have a networking session. Hopefully, in the course of this conference, you get to meet more people.